Hello and welcome to the February 13th, 2019 edition of the Gold, Goats, and Guns Market Report. My name's Tom Luongo. I hope you're all having a great Wednesday morning. I'm a little late getting this one started. It's nearly 11 o'clock. I've been working on the slides. I got up a little late this morning, but lots going on today, and I'm trying to keep track of everything, as a matter of fact. And a lot of things I want to talk about required me to do the research first and do some other things. So before we got to putting this one together this morning for you. And the reason is because things are progressing rapidly now in Spain. And Spain's been kind of off the radar in many ways for a little over a year, certainly since the 2017 elections ended with a cartel-style coalition, a minority government in Madrid that saw Mariano Rajoy removed from office and Pedro Sanchez take over leading the leader of the Socialist Party. Now, two things have happened in the last 24 hours relative to Spain that bear on the situation. One is a complex situation with Santander, the bank Santander, refusing to call in a what's known as a CoCo loan or a conditional collateral loan, and I think it's called conditional collateral. It's effectively a loan that the bank has the option of choosing to redeem at the end of it's a bond effectively that isn't called in at the end of its term. So if it's a 5-year bond, you hand $1,000 over to the bank. They pay you a coupon, and at the end of the 5 years, they give you your money back. You give you $1,000 back, and you pocketed the coupons all the way around. These CoCo loans or CoCo bonds are conditional, meaning the bank has the option of whether or not to actually give you your money back or roll them out into a perpetual debt, kind of like a preferred stock arrangement, if it's to their advantage to do so. In the case of Santander, it was. They're paying out now in perpetuity something like 5.4%, or at least it's something like, I don't know, Euribor plus 5.1% or whatever it is. It works out to the current rate of about 5.4%. But the truth of the matter is that the reason Santander did this is because they don't have the liquidity. They had the option of not doing so and holding on to their capital. It was a way for them to raise capital to satisfy bank regulators, and then they're going to hold on to the capital because they still need it. And they're not a healthy institution, and therefore they're going to hold on to it and just pay you out your coupon in perpetuity. Now, there's a lot going on here in that this is a $340 or $350 billion industry, and it is it's grown up in the wake of the Lehman Brothers crisis, and has been a way for the ECB and Europe to recapitalize the banking system. Excuse me. So that is that's been part of the process here, and it's kind of the story behind the scenes. I hadn't really been aware of any of this. It's something that I missed, and it was we were talking on the Slack channel last night about it to get a better idea of what's going on, and but it became really apparent very quickly that to me, and it's very obvious that there's trouble in the Spanish banks, and Santander has been, by the way, the target, not the target, but the recipient of the ECB's largesse, having wound down various banks that under its expanded regulatory rules to help Santander out by winding down quote unquote banks that are quote unquote in trouble. Something like Banco Popular from 2 years ago, for example, and there have been other incidents of this. And the likelihood here is that what the ECB is doing is trying to consolidate under as much capital as possible under these larger banks, and then they can control that bank as opposed to having to control 3 or 4 by shoring up one bad bank's balance sheet with the good assets of another bank that they've unilaterally deemed to be in arrears, right? To be unsustainable. And there's going to be a lot more of this as time goes on. And it's going to be very, very ugly. Now, the real issue, though, in Spain, and I've got a chart, which is part of the reason why I'm a little late this morning getting this out to you. The real problem in Spain now is that the government's most likely going to call for snap elections. The Sanchez has lost a major funding battle to the nominally right-wing parties in Spain, with the Basque and Catalan independence parties, the very small parties, voting along with them to kill a funding bill. I think the details of this aren't really very important. What's important is that Sanchez now wants to, in this rebuke, wants to call for snap elections, or he can't hold on to he can't hold on to his coalition. His coalition is very weak. So now what's the situation? Well, if you read The Guardian, which is where a lot of this came from this morning in the report on Zero Hedge, mostly cribs from the report on The Guardian, which, by the way, quotes very, very out-of-date polls. And this is the big one. The Guardian's quoting that the major parties, the conservatives and the socialists, are both polling near 30%. That is not the case. I looked at the Spanish polling numbers this morning, and those numbers are far different from that. I'm going to chart for you and some seat projections as to what this is going to look like if the current polling numbers hold true. Because the current polling numbers are, again, they're significantly different over what The Guardian was quoting this morning. And with the trial of the leaders of the Catalan independence movement going on in Madrid right now, and thousands of people turning out in protest of this, I just don't see that these numbers are going to be in the ruling party's favor. That what we have is the rise of a Eurosceptic party that's rising very rapidly. I know you're shocked to hear this, and the party's called Vox, and they're now polling well over 10%. In an election, in a electorate that is already incredibly fragmented, right? Now, Spain's numbers now kind of look like the situation in Germany. We've got like 6 parties now all polling in double digits. And so no one can really make an easy coalition on this. So I'm going to talk more about this in particular when we get to the charts, because I want to show you the seat projections that I'm looking at this point. Okay, so the next thing is Brexit. Let's talk about Brexit, because we've got another thing that's going on, which is that in Brexit, it's pretty obvious that now everybody is accusing Prime Minister Theresa May of running out the clock. And that's interesting because that's been obvious now for weeks. She's running out the clock to either get her deal or no deal. And the question is, which side of the fence does she actually rest on? And I know that Nigel Farage is Mr. Doom and Gloom on all of this, and I don't argue with him about that. But it seems to me that it's very possible that we could have an upside surprise here with a no-deal Brexit being the most obvious, or the most still the most likely outcome. There's very little chance that the Eurosceptics, the Remainers, are going to be able to stop Brexit at this point. It's going to happen on the 29th of March. And the biggest, and there's 2 big tells for this. The one is the op-ed by George Soros yesterday, which I wrote about on the blog. And the second one is the report from the Duran that Labour Remainers and Tory Remainers are going to jump ship and start a new party in order to try and, over the course of time, reverse Brexit. Because now they have to start thinking long term, because there's no way they're going to stop Brexit in the next 6 weeks with this. But this is a longer term plan to try and undermine Brexit by undermining and trying to take support away from the Tories and Labour. So it's an interesting situation where everything's breaking along ideological lines, and the British electoral system is being thrown into kind of chaos over this. And it's actually a really good thing in a sense. But again, these forces are straining all of these old fake relationships, these fake dualities, these false dualities, right? Of right versus left, Tories versus Labour, Republicans versus Democrats, and all this stuff. It's not about that at all. The real face of the Uniparty, the real face of the neoliberal control system, bears its ugly teeth the minute it is truly threatened with some kind of existential threat, which is what Brexit represents. And so, again, and then we start thinking in terms of all of this is happening while the Italians are pushing really, really hard and Soros is out there literally whining that he's going to lose, that we're going to lose everything. Like, it's almost like it was actually really quite sad to watch Soros plead in public, like like a little girl. I mean, he's pleading like a little child for his cookie. I mean, it's like, really, you're supposed to be the most powerful man in the world, and this is what you're reduced to. It proves to you that the power is ephemeral. On top of all of this, as I'm watching the markets this morning, gold goes ballistic. And I'm not even going to show you the gold number in dollars this morning. I'm going to show you the gold number in euros. The gold in euros today is up like $9. It's up like €9 today, or something crazy like that. We talked about this previously. This is still the monthly chart, and the reason I'm putting up the monthly chart is because what's the point of the weekly chart? None of you are going to trade gold in euros from that perspective, so it's not really all that interesting. But what is interesting is that we had this consolidation period, this pair trade in the wake of Donald Trump's election that went on for months on end, right, for over a year, and then we had the false move down, which brought gold down near €1,000, and now we've had this 5-month uptrend past the pair trade level, and then we're now pushing towards this next high here at 1221, and then obviously the all-time high here, or the near-term high, the post-Brexit high, sorry, at around 1250. So we're already pushing back towards all of these levels, and this breakout point hasn't even been tested in now going on like 4 to 5 weeks. It's just pushing higher, and that's really impressive. And the fact that gold is pushing back above 1320 this morning in dollars is also really impressive. It's telling you that no one has any faith in any of this stuff anymore, that the faith is beginning to break down, that I've been talking about it, that since the Fed made their announcement about their latest FOMC statement that they went dovish again, that market liquidity is drying up, because QE, of course, is deflationary, not inflationary. It prints money, but its net effect is to remove money from circulation, because when the central bank is scared, people respond as if the central bank is scared, and they withhold bids. They're not, and we might see a rising stock market, and this is why we continue to see a rising stock market as well. I'm going to go back to that Spanish chart in just a minute. So we have the Dow this morning is back above 25.5, is pushing towards this peak here at 25,980. Just for those of you who still do this stuff, I ran a Fibonacci series on this, and this is the 78% Fibonacci level. It all dovetails nicely with the downtrend, with the break of the downtrend line, which has been this downtrend line here, which has already been retested. So, having looked at the chart from the way the rest of the world looks at charts, 25,980 or 26,000 is going to wind up probably being the top of this rally. And then there's going to have to be some kind of correction, because we're now talking about 8 weeks. We're talking about a straight 8-week uptrend now. I mean, yeah, there's been some minor corrections along the way and some volatile inter-week volatility, but this is going to have to end very soon before it decides to want to make a full-on approach towards 27,000. So if it doesn't, it's not going to be sustainable far above that. But this is, again, confirming our thesis. We have the Dow busting back through resistance levels, and this is looking more and more like the false move down in the Dow. They got everybody offside, and now we're seeing this massive move higher. We're seeing the central banks having to reverse their narratives about an improving global economy and all this other stuff. There's Trump's trade talks with China are, the market was happy that Trump is probably going to extend the tariffs. And I told you he would extend a tariffs extension, that he wouldn't put tariffs into effect on March 1st, because he doesn't have any leverage in negotiations with China. So, he's done his big ass thing, and now he's gonna pull back to almost nothing. You watch. We may see him actually, stand up on the wall. Again, I'll believe it when I see it. So this is where we are. So a lot of this has all just been kind of false volatility. in the long run. So let's go back to Spain real quick. So I want to show you what I'm talking about. Now I'm going to do a further full video on this, I think, this afternoon. Or I'm going to talk about Brexit, one or the other. I have to do a video on YouTube this afternoon. Keep that watered. But what's important here is to understand that the dark parties are nominally the right-wing parties, right? So I tried to color code this to make it easy. That the yellow parties would be the nominally leftist parties, and or the others. I'm not even sure that the others would align with the two left parties over here, which are the socialists and Podemos. And you'll notice that together they're only projecting out about 140 seats. Now, you need 150 to be able to put a coalition government together in Spain, even though there's 350 seats in parliament. Minimum 150 needed to be able to form a government, which is how Sanchez was able to form a government previously. He had 150 seats. It's not a majority government, but it's also made it impossible for him to get any legislation passed. So now the People's Party and the Citizens Party, which is Ciudadanos, I hope I pronounced that, or at least didn't butcher it, reasonably well. Together, they almost have enough here. And then the kingmaker is either one of the separatist parties, the Basques or the Catalans, here with 5 to 10 seats, or in order to get past the 150 point, or a deal is made with the Eurosceptic party, Vox. Vox has currently 0 representation in parliament. The reason that Sanchez is calling for for snap elections is not just that he's confident that he's going to win, because he's not confident he's going to win. He's confident that they have to blunt the rise of Vox and keep its representation in parliament to a minimum, and its ability to play kingmaker low, because the numbers are stark. If you look at, I got these numbers from Wikipedia off of the latest polling, and these numbers are as of the end of January, early February. And that's the latest polling numbers that I could find. The Guardian was talking about polling numbers being in the 30s, and those polling numbers are way out of date. So Vox has risen very strongly in the last 6 to 8 weeks, from minor party status now to 11%. Okay, on average. And I took the last 5 polls that were all conducted by 5 different groups over a 7-day period at the end of July. So it covers like the last 7 days of January into February 1st. Okay, so that's what we're dealing with here. Those numbers project out that Vox is going to pick up 41 seats, and 41 seats, and that's also taking all the undecideds and folding them back in equally, and all of this stuff. I was fair with the numbers. I didn't try and play around here. There's 4.5% of the electorate that's still undecided as to who they would back. So I added them all in proportionally to all the other parties, all the other groups, basically. So y'all get 0.6% or 0.8%. It's maybe not real, so these numbers may not be completely accurate, right? Because obviously there's fungibility in the polls and everything else, but these numbers are close and as good as they're going to get given the current state of polling. So I find this very interesting, that there's no possibility that Vox is going to be able to, like AfD in Germany, form a coalition with one of the major parties. That's not going to happen, right? But the question is everybody going to ally themselves in such a way as to freeze them out? That's the more likely scenario. And it's just similar to what they tried to do with the League in Germany, in Italy, and the same thing with AfD in Germany, which was to blunt its rise, so that so even though they're going to get a seat at the table, or 41 seats at the table, they're not going to get 60. Because then that would change the calculations completely. Because imagine if Ciudadanos is able to hold on to 70 or 72 seats, and Vox was able to push up to 15% and take 20 seats away from the other parties. Now you're at 135. The separatists, the Basque and Catalan separatist movements could easily push them just over the 150 mark. It's still a mess. It's still cartel-style government. But it's now a completely different government. It's not in the hands of the socialists, nor is it in the hand of the conservatives of Mariano Rajoy. And that's that's what the European Union is scared to death of. All right. So those are the things I've been looking at all morning. I got one last chart to talk. So I'm going to go into this a little bit more detail later on, but wanted you guys to know what I was thinking and why I think this could be very interesting. So moving ahead to the last thing I want to talk about. So numbers out of Russia. I did a thing the other day on the Russian trade surplus and everything. And the numbers are now coming out for all of 2018 and into Q1 about Russian trade with Europe. And obviously this is a very important point because Russian trade with Europe is going to determine what Europe does in the long run. When or how is it going to finally stand up and say, you know what? No, we're done with all this nonsense of kowtowing to everything that the United States wants. And again, multiple factions are dealing with this stuff and whatnot. But the important thing here is that German trade with the Russians increased 9% last year, and the Russians continue to have a trade surplus with Germany, which is also very interesting. Okay, and it's not just on energy, right? But there's a lot of money coming back into Russia from German industry, which is, and the Americans are now pressuring Siemens to not do business at all with Russia, which has sparked a violent response from the German political class. So, and now we've got the leader of the Christian Democratic Union rebuking Merkel for her immigration policy and everything else. That was out on Zero Hedge this morning. So German politics is, complete mess at this point. But I just wanted to note that the ruble and the euro, relatively stable, relatively speaking, pretty stable ultimately. And that's going to foster trade over the long term. But the other thing here is that we could easily see a breakdown here, that the euro is starting to weaken even versus the ruble. Now, why is this significant? Well, it's significant for two reasons. The Russians have moved a significant portion of their foreign exchange reserves into euros, and they should, because they have a tremendous amount of business that they do with Europe. But it's also a lot of their corporate debt is now denominated in euros and not in dollars. And so the ruble strengthening versus the euro makes all those Russian corporate balance sheets improve that much more. It makes them insulated from the coming sovereign debt crisis that's coming. They've gotten out of the currency, the dollar, that's going to go through a super cycle peak in the short term, and have moved into the currency that they're going to, that they're accumulated, that they have all their debt accumulated in, or denominated in now. Like the debt for Nord Stream 2 is all euros, all $9.5 billion of it. So Gazprom's balance sheet is only going to improve here while they're still selling gas to the Europeans. Now, will that have a suppression on Russian exports into, mainstream exports, non-energy exports into Europe? Yes, it will. But it will also encourage European investment into Russia, despite U.S. sanctions. So watch the verge of this breakdown between the euro-ruble pair here, because it could be very, very interesting long term. Okay, this is just a long-term thing to put in the back of your bonnet, all right, and to put in the back of your head to think about as to why this stuff, because the currency markets are now starting to tell us that there's going to be a revaluation of European Russian trade. And we could easily see that number drop from 74 down into the low 70s, or down towards 70 and possibly even to the high 60s, which would reverse all of this loss from last year due to Trump continuing to put sanctions on Russia and trying to starve the capital. All right. So that's what I've got for this morning. I got a lot of other work to do. I better get to it. You guys take care. You have a great afternoon. If you have any questions or you have things you want me to cover, as always, leave them in the comments below. Send me a DM on Slack, and I'll try and remember to do all that, or send me an email or whatever, and we'll go with it from there. All right. You guys have a great afternoon. We'll talk soon. We'll talk Sunday. Be good. Keep your stick on the ice.